The recognition criteria are fundamental principles that all elements of the financial statements must satisfy before they can be recognized. Module 1 goes into some detail on leases, revenue recognition, and construction contracts. Accurate interpretation of these different standards require accurate application of the recognition criteria. Only once the item meets the definition does the accountant then consider the recognition criteria. The recognition criteria is basically two requirements. We will look at each in turn. The first requires that the flow of economic benefits is probable. The key word in this is probable. There is no set definition of what probable is. The guidance given is that probable means more likely than not. So if something is likely to occur, then its chances of occurring can be described as probable. Another guidance for determining probability is to evaluate if the chances of it occurring is greater than 50%. It should be noted though that these are only guidance. The actual determination of probability requires the application of professional judgment. For example, let's assume that Chemical Limited is a small chemical producing company. Due to its size, Chemical Limited has never been required to have an audit. However, the government is currently deliberating new legislation that may scope Chemical Limited into the audit requirement. The decision is expected to be made public in the next month and is expected to be applied 1 year in retrospect. The accountant, Freddie, is in the process of preparing the year-end financial statements and is unsure whether to recognize a provision for audit fees or not. Chemical Limited's lawyers indicated that similar deliberations took place in five other countries. 3 of those countries adopted the new requirement that requires smaller companies to have an audit. Limiting your consideration to only the recognition criteria, is the outflow of economic benefits associated with audit fees probable? The answer is yes. If we refer to the guidance of what probable is, we know that it is more likely to occur than not. We also know that if it has a more than 50% chance of occurring, then it is probable. If 3 of the 5 countries considering similar legislation adopted the new audit requirement for small companies, then there is a greater than 50% chance that the government in the country in which Chemical Limited operates would also adopt the legislation. Therefore, the outflow of economic benefits associated with the audit fees are probable. The second requirement is that the cost of value can be reliably measured. Reliable does not necessarily mean that the exact cost of value need to be known. It simply means that there must be a high degree of certainty. For example, reasonable estimates that are considered reliable would satisfy this criterion. As with probability, this also requires the application of professional judgment.